Welcome to Timing the Market for August 1st, 2014. My name is Todd Schaefer, Manager of Research for VectorVest, and I'll be providing your market review this evening. At VectorVest, we advocate that understanding the market's trend is the most important consideration for your trading success, more important even than stock selection. For that reason, we've developed a timing system that consists of several indicators and parameters to help us identify the current market trend. Let's move into the program. The home page of our software is laid out to look just like the front page of a financial newspaper. In this case, though, our newspaper is all about market timing. We begin our review of today's market action by looking at the trading activity of the major indices. Here we see all of the indices down today. The big mover, the Dow Industrial, is down 0.42%, and our VectorVest Composite down 0.31%. That trading action resulted in a market timing gauge 3 ticks in the red. We have a guidance statement and headline that says the color guard is bearish. VectorVest does not advocate buying any stocks at this time. This gauge and guidance summarize the top row of information in the color guard square below. It's here that we're analyzing the trends of the components of that market timing system. The components themselves are identified in the VectorVest at a glance box here to the left. We currently track 8,300 stocks in the U.S. database. From those stocks, we calculate an indexed average price, which becomes our broad index of the market called the VVC, or the VectorVest Composite. Today, that average price calculated to be $37.04. We prefer this broader index to the narrow indices because we want to understand the direction of the broad market, not just a narrow slice. Our next indicator in the market timing system is the BSR, or the buy-sell ratio. Every day, we assign a buy, sell, or hold rating to every stock in the database. Here we look at the relationship of buy ratings to sell ratings to indicate internal market strength. Today's ratio closed at 0.34, so we have many more sells than buys, typically indicating market weakness unfavorable to investors. Our next indicator is the VectorVest Composite RT, or relative timing. This is the short-term trend analysis of that VectorVest Composite price movement. It's cast on a scale of 0 to 2, with 1 being neutral. Values above 1 indicate the short-term trend of the market is upward. Values below 1 indicate the short-term trend is downward. The closer you get to the extremes of 0 and 2, the stronger those trends. And so with an RT value of 0.93, we see the short-term trend of the market is slightly down. Next, we come to the MTI, or the market timing indicator. The MTI composites the analysis of the price, buy-sell ratio, and relative timing into one comprehensive indicator. It too is cast on a scale of 0 to 2. With 1 being neutral at a score of 0.84, the underlying trend of the market, as indicated by the MTI, is down. So those are the components of the market timing system, and as important as their individual data points are, it's even more important to understand how they're trending. And so we turn again to our color guard indicator. Here we're analyzing the trends of those indicators by looking at their underlying data points in 2 time frames, both week over week and day over day. Generally, if the weekly trend is confirmed by the daily movement, we'll assign a green color for upward movement, a red color for downward movement, and if they're mixed, we'll assign a yellow color. This allows us to see graphically and rather intuitively the short-term trend of the market. If you have a majority of green lights, it would indicate a bullish condition. A majority of red lights, as we have here, would indicate a bearish condition. If the majority were yellow, or if we saw red and green together, it would be indicative of a transitioning or non-trending market. If we look at the assignment of colors today, we see the price of the VectorVest Composite closed at $37.04. That was lower on that week-over-week basis, confirmed by the downward movement today, and so we assigned a red color to it. Because it is lower on a week-over-week basis, that's the rule for our fastest timing signal, the primary wave, which is recorded in the first pair of initials in the trend column, and so that primary wave is down. We can see that it significantly changed from up to down in the middle of this past week. The asterisk that we see today indicates that we also have a confirming bearish crossover of our RT Kicker combo timing signal. I'll demonstrate that crossover when we get to the graphing section of this report. Next, we come to the relative timing. It closed today at a value of 0.93. Lower on a week-over-week basis, lower also again today, so its color is red as well. And the buy-sell ratio closing at 0.34, down week over week, having crossed from above to below 1 this week, and also down from yesterday. Again, its color assigned as red. Turning next to the MTI column, we don't assign colors, but we can see that the MTI, also lower than it was a week ago and lower than yesterday, it has been steadily declining for this whole week. Because the MTI value is below 1, the underlying trend of the market, represented by this second pair of initials, is also down. Completing this range of signals then from our fastest to our slowest, the confirmed call, which is also down, all of our market timing signals currently bearish. Let's move to a market timing graph so we can see the broader trends of these indicators. Clicking on the Graphs tab, you can see I've set up the default market timing graph looking at a 1-year time frame. On the upper graph, we have the price of the VectorVest composite represented as candlesticks. Those are on daily candlesticks. And we have a 40-day moving average moving through that VectorVest composite price. On our 3 subgraphs, we have one graph each for each of the components of the market timing system, the MTI, the buy-sell ratio, and the RT. We'll begin our study with price by taking off the subgraphs of the components of the market timing system. Here we can see on a year-over-year basis that the VectorVest composite price is higher. We can see several periods where the price action broke below that 40-day moving average. If we drew a trend line connecting those lows, we can see price sitting right at that trend line support. If we zoom into a 3-month time frame, we have a confluence of several indicators here. First of all, we see the price pulling back off of its high that we established back here on July 3rd. Most recently pulling back, breaking below that 40-day moving average, which has now started to curl over and slope downward. But we'll also notice if I add a parameter to our graph for support and resistance, and I'll set it up for medium-sized zones, we can see significantly that price broke through what had been support and is right now resting again, testing this new support line with a calculated value of $36.92. That support line being very close to our trend line support as well. Of course, should that support level fail, then our next support level down here at 36.01. So a very sharp sell-off in the month of July for the VVC, breaking short-term trends and support levels. Let's take a look at the other components of the market timing system and see how their trends have been affected. Let's begin by cleaning up our graph and removing some of our lines. And we'll put on a date line reflecting the week-over-week change in our indicators. So here we can see price is certainly down on a week-over-week basis. Let's add to our graph the MTI. The MTI, as we saw on the home page, lower on a week-over-week basis. We've also resumed this downtrend now, establishing lower lows and lower highs. Its current value at 0.84, approaching the lows set back here in the last pullback back in May, which had a low value of 0.81 or 0.80. Of course, we still have some room to go before we hit that historically low 0.60 level where we start looking for a bottoming market. Let's take off the MTI and put on the buy-sell ratio. Again, going back to our historical 5-day period. Here again we see that the buy-sell ratio is lower on that week-over-week basis, significantly crossing from more buys than sells to more sells than buys. Again, resuming that downward trend of a series of lower highs and lower lows. In this case, however, unlike the MTI, we did establish a lower low at 0.34 relative to the last pullback we had, which looks like we had a low of 0.45. So this sell-off a little bit stronger than last. And if we take off the buy-sell ratio and put on the relative timing, our short-term trend, we closed today at a value of 0.93. Again, lower on that week-over-week basis. Again, resuming that downtrend, but not quite as low as it was in our previous pullback. But significantly in terms of trend in both the price and all of our supporting indicators, we've broken that sideways pattern we were in and have definitely broken out to the downside. Of course, we're always trying to identify the market's trend, not just the short-term daily price fluctuations. So let's change our layout to the green light buyer RT kicker layout. In this layout, we apply 2 moving averages to our RT indicator, both a 10-day and a 15-day, and we look for their relationship to identify whether or not the relative timing indicator is accelerating or decelerating. Here we have that bearish orientation where the short term is below the long term. And we can see with today's market action, they're lower on that week over week basis. They're both sloping downward, and if we look at today's data point, we see that the short term crossed below the long term, and this is what confirmed that red light, the asterisk that we saw on the home page in the color guard. Next, we'll change our layout to our DEW timing system layout. DEW is an acronym that stands for the technical studies that make up the timing system. The D is the detrended price oscillator, the E stands for envelopes, and the W stands for the weighted moving average, in this case a 30-day weighted moving average, moving through that VectorVest composite price. Looking at today's action, we see that the price of the VectorVest composite is operating well below that 30-day weighted moving average. The detrended price oscillator has been bearish now and continues to hit lower values, reestablishing its downward trend. On our subgraph, we have the moving average convergence divergence study, a little more sensitive than the DPO, and often helps us identify turning points. We see that it really turned bearish at the beginning of this past week. It's continued that trend as the amplitude of the histogram continues to grow, closing at a value today of negative 0.11. Significantly, we also see the line pair crossing from above to below the zero line, which indicates a change in momentum with this indicator. And so again, with our date line indicating the end of last week's data, we can review our timing systems. Our confirmed call, our slowest timing signal, remains down. Next fastest timing signal, the DEW signal, changed from up to down last Friday. The RT kicker combo, which is the red light that was confirmed today, again signaled a downward movement of price action with momentum today. And the primary wave, our fastest timing signal, as we saw on the home page, currently down. We signaled a change in that short-term price trend this week on the 29th. And so to recap, all of our market timing signals bearish. This is not the time to be buying stocks long. Of course, you can play the market to the downside. If you're waiting for that next bullish signal, you'll see it develop when the price stops trending down in the short term and starts heading back up again. The first thing you'll see change in the market timing system will be, we'll see that primary wave change from down to up. And that'll be very evident by looking at the home page, and we'll see this first initial turn to up. Of course, that may be too early for you to take action based on your temperament, but simply read the views and we'll help you identify the proper time. Speaking of that, let's go to the views and get our guidance for this current market condition. We'll click on the Views tab. The Views is our daily newsletter, published Monday through Thursday in a shortened version, which includes both our timing and strategy sections. On Fridays, we have a much more extensive version, and although we won't cover all of the chapters, there's a lot of information here, especially some macroeconomic and climate information that's important for you to understand. We'll begin in the overview section, where we begin with all of our department contacts and phone numbers. If you need any help, we want you to be able to contact us. Live events scheduled for next week. We're back on the road after taking July off on hiatus, as we do every year. So we'll be in Boston on August 14th, 15th, and 16th to do our intermediate options course and our 2-day seminar. Lots of new and revised presentations in that, so very worthwhile to see. And our Trading as a Business workshop gets reestablished again on August 21st through the 23rd. After that, we'll go to Seattle. Why not tag each coast within the month of August? If you're interested in learning more about the individual events, you can click on the hyperlink or click on the register link to register for the event. Below our live events is our webcast schedule. Our webcasts have become very popular. We'll actually begin the week with our Strategy of the Week Q&A session, an open-ended session where we talk about the strategy presentation for the week and anything else VectorVest. And we'll also present our basic lessons 1 through 4, must viewing for anyone who's using the VectorVest system. For our events, we come to our essay section, beginning with the market in review. A drop in pending home sales disappointed investors Monday, but spirits rose slightly after a round of merger and acquisition news. The Dow managed to fight back and clock a modest 0.1% win, while the S&P 500 ended just above even, gaining just 0.03%, and the Nasdaq dipped by 0.1%. Despite upbeat earnings from Merck and Pfizer, stocks faltered Tuesday as geopolitical concerns took center stage following a decision to expand sanctions against Russia. The Dow, S&P 500, and Nasdaq all fell by 0.4%, 0.5%, and 0.1% respectively. News that GDP rebounded sharply and the Fed kept its monetary easing at $10 billion and interest rates unchanged did little to inspire investors midweek, as stock prices teetered most of the day, with the major indexes finally ending mixed. The Dow dropped by 0.2%, the S&P 500 ended flat, and the Nasdaq gained 0.5%. Wall Street took it on the chin Thursday, with all three of the major indices plummeting by nearly 2% as tensions mounted in Russia and Argentina defaulted on its debt. The downside momentum continued Friday as concerns over Argentina's default continued to weigh on sentiment. Both the Dow and Nasdaq sank 0.4%, while the S&P 500 shed 0.3%. All three of the major indexes closed the week sharply lower, with the S&P posting its biggest weekly loss since 2012. And that's the market in review. Now an essay from our founder, Dr. Bart DeLito, this week titled Be Happy. I heard a soundbite on CNBC yesterday in which Warren Buffett was asked what he thought about the market sell-off. Mr. Buffett said he liked it and was a happy man. He said he's a bargain hunter and likes to buy stocks at bargain prices. So he's a happy man. I believe him. He puts his money where his mouth is. As I recall, he loaned Goldman Sachs $5 billion near the bottom of the bear market in October of 2008. I wrote an essay on October 17, 2008 called Time to Buy. I must admit I was influenced by an op-ed piece in the New York Times by Mr. Buffett, in which he said, "The time to be greedy is when others are fearful, and the time to be fearful is when others are greedy." That's great advice, but I believe it's too early to be fearful right now. According to our truth chart, the market is in a case 4 bull market scenario. So the damage, or bargains, depending on your point of view, created by this downturn will be limited. That doesn't mean you can be careless with your portfolio, but preserve your capital so you can go bargain hunting when the opportunity arises. Take Mr. Buffett's advice and you too will be happy. Next, attend the Boston Extravaganza. We guarantee that this will be the best 2-day investment seminar you've ever attended. We're going to have a great team of instructors, great money-making content, great presentations on new products, great food and refreshments, a great cocktail reception on Friday evening with great prize drawings and a great presentation on the 7 secrets to making money with VectorVest. Great special deals and low prices on all VectorVest products and services, a great free event voucher worth $295, a great Surefire Success Performance Guarantee, a great hotel with a great location and great low prices, and you can bring a friend for free. Wow, that sounds so good, I'm going to attend the Boston Extravaganza. So for those of you in the area, a great opportunity to meet our founder, Dr. Bart DeLito. Next, we'll scroll down to the strategy section of the views to get our guidance. Earnings, geopolitical concerns, and everything else took a back seat this week compared to the frightening power of the Fed. The price of the VectorVest composite fell 85 cents per share since last Friday and closed the week at $37.04 per share. The primary wave is down. At 0.34, the buy-sell ratio, or BSR, is at its lowest level since February of 2014. If one goes back to June 4, 2014 on a 3-month market timing graph, they can see that the price of the VectorVest composite has just completed a double top formation. So we may be nearing the bottom of this downturn. The top of that formation became our support line that we saw on the market timing graph. But don't bet on it. Let's wait until we see the primary wave go to an up designation before we start playing the upside of the market. With 3 red lights in a down-down situation, the color guard is bearish. Prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market to the downside. Next, we identify the best performing 1-day and 5-day derby strategies. The mix of bull and bear strategies on the 1-day winners indicating a bit of a bounce day here today, while we have the bearish trend established well for the 5-day winners. For you easy riders, no duplicates today. Next, let's take a look at our sample portfolios and how they performed. With our confirmed red light, we did have some trading activity in our sample portfolios, beginning with the Russell 2K Verns Vultures portfolio. We're going to close one of our long positions CRR and pick up our first hedge with shorting PBYI. And then in our Contra ETF folder, the S&P 500 Stop Ascending Index ETF Contras, again, we're picking up one of our Contra ETFs, so this is a hedge trade, picking up shares of SDS. As for the big mover today, the S&P 500 Stop Ascending Ballistic New Highs portfolio, which does have one hedged position, down 0.95% today. Finally, in conclusion, if we go back to the views, next we'll have a special presentation called Testing Your Ideas. But here we also provide hyperlinks for the webinar that we'll hold on Monday, and also for the trial to the VectorVest Auto Timer as presented in this presentation. But with that, we'll conclude this section of our presentation. If you will, stand by, and the special presentation will begin next.